So guys, welcome back to Black Arrow FTFX. I'll be explaining breaking down market structure. So first of all, what is market structure? Market structure is used to define market movement in the market. So it can use to define market movement, and there are three different types of market movement. It involves the bullish trend, okay, forming high highs and high lows, and the consolidative market, and also the bearish trend, where market is forming lower low and lower highs. So guys, those are the three market movement. But I think I should I'll later break it down for you guys more in depth. So we have three types of market, which is the bullish trend. The bullish trend it forms higher high, higher low, higher high, higher low, higher high, higher low, higher high. So whenever market breaks a recent high, expect for retracement, then buy to create another new higher high. So but I should mark it out for you guys. So guys, for an uptrend, you want to see market making higher highs, higher lows, higher highs, and higher lows. So if you look closely, this is an uptrend. This clearly is an uptrend. This you see here is an uptrend. And how did you define an uptrend? Where market forming higher highs, higher lows, higher highs. And if you watch closely, every single time market breaks breaks a high or takes out an high, we see a retracement down to the downside. Then it forms a higher low. So if the market is in the buy trend, you can call it a bullish trend. I call it a bullish trend, a bullish trend, a bullish trend, bullish trend. So it's not only called an uptrend; it's also called a bullish trend. Whatever market is forming higher highs and higher lows, higher highs and higher lows. So as if you're going to trade market structure, after every single break above a higher high, we are forming a new higher high. So what we're going to wait for is for market to form a new higher low and take the entry all the way from that new higher low to the upside. So that's basically. And guys, if you watch closely, all these are buy tools. So if market's an uptrend, you want to be buying from the higher lows. So you want to only buy after the market has created a higher low. So after the higher high, market broken this high, taking out this high from the higher high. We trace and made the higher low. You wait for your strategy to confirm you a buy trend before taking a buy to the upside to create another higher high. And then wait for your retracement. Understand? Wait for your retracement to take another higher low to make a new higher high. Basically a new higher high. That's it. So and remember guys, and remember that this structure here you see is a swing. You should call it a swing structure. Understand? As I once told people that whenever we create a new higher low, expect a new higher high. Understand? And whenever we create a new higher high, we expect a retracement to form a higher low for a continuous uptrend. But considering this as a swing structure, there are smaller structures in between here that make this retracement. Smaller structures, smaller structures consisting of lower low and lower highs till the structure is broken and a retest is formed before a buy. So this is clearly what is happening around this area here. Should mark that out. Let me say from this area here, from this area here, this is likely what will happen just around that area. This structure you see here. So we'll likely be saying break a structure to the downside, forming lower low lower high in the minor time frame. Just consider this massive swing structure as a 4 hour time frame or the daily time frame. We expected to see a massive trend, Masa, which is this higher low trend you're seeing, and we expect this to be a swing structure. So within those swing structures, if you drop down to lower time frame, so the 1 hour 30 minutes time frame, we expect to see minor structures. Those minor structures now tend to give us a clearer market direction. Understand? Tend to give us so if you look clearly, this is a minor structure. It's a minor structure, forming lower highs to the downside. So what we clearly expect for the market to change structure here. So you see this if you look closely, I should zoom in closely. You should take this to the other side. If you look clearly, if you zoom in clearly, you see that this we created a new high here. This is a new high, taking out this recent lower high and coming for a test. So many I likely will take my entries after the retest has happened. Understand? After the retest happen. So my entry will just be somewhere around there to the upside, and my stop will just be somewhere below that new higher low that was created. So we could go change it from a bearish structure in a lower time frame to a bullish structure in a higher time frame for me to continue in this swing structure. In this swing structure here, this structure you are seeing here, this retracement. So what we're going to be seeing is in this retracement here to form a new higher low. We want to see this minor structure showing us lower low, lower high bearish structure. Understand? Which is all this lower low, lower high structure to the downside, forming a new higher low. So what we want to expect is for market to change direction in that smaller in this minor time frame. Understand? Let me say around the 1 hour 30 minutes time frame. I want to see this move here happen at this area. So I should delete these guys. So I want to see this move happen around this area. You see? I want to see this move happen around this area. So this move should be this lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And if you to make a lower high and make a higher high, taking out this high here, this lower high here, showing us that the trend has changed from this bearish retracement to the bullish impulsive move. So our entry will only be after the retracement has been made. So by that time we've confirmed our higher low. And stop just somewhere around there. So guys, that's basically how it is. And if if it's on a downtrend, you'll still be expecting the same thing. Let me example. If you're going on downtrend, excuse me guys. If we're on a downtrend, all these they call it a swing structure, which is lower low, lower high, lower low, lower high, lower low, and lower high, and lower low. We want to be seeing within this retracement structure, we want to be seeing market making higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and then take out this higher low here, and then form a new higher high and higher low for us to confirm market shift direction to the downside. Yes sir. So this should just be it. This is what we want or expecting to be seen around this area, which is the minor structure. But this ones here, we're just imagine looking at this as this main swing structure. So this now will now be the minor swing structure. So that's how it is, guys. So basically that's how I trade using market structure. So this is what a bullish trend on uptrend is all about. So if you go to a consolidative market, many of you would think that a consolidative market has only one um, trader in it, though. But however, we have both the buyers and the sellers in this market. This market consists of both buyers and sellers. So it's more like a ranging market, the consolidative market. So it's more like a ranging market where the buyers are at opposite ends, struggling. Understand? The resisting market has opposite ends. So this is how it is, guys. This is how it is. So we can all expect the buyers and the sellers to be holding out. Understand? So how we do normally trade this for price action traders. You mainly wait for just a breakout and retest and buy to the upside. And if the market is selling breakout and retest, then we take a sell also all the way to downside rather. Sorry guys. So that's basically how it is, guys, for consolidative market. So most of you normally will take the buys at the support area if you trade price action trading on the support area and buy to the upside, or from the resistance area and take the sells to the downside. So guys, that's basically it for a consolidative market. So you can see that the buyers and sellers are in disagreements here. Understand? They are equal at this level, or should I just say that they are equal at this level. So that's it on consolidative market. So the next type of market is downtrend. It's a downtrending market, which can be called a bearish market. A bearish market can be called a bearish market. Bearish market. And in the bearish market or in the downtrend, I want to see lower low, lower highs, lower low, lower highs, lower low, lower highs, and lower low. So that's basically what we want to be seeing on a downtrend or on a bearish market. Then guys, for a bearish trend, we want to see a lower high, a lower low. We want to also see a lower high again, and then a lower high, It's a lower high also. It's a lower low, and this is a lower low. So in a bearish trend, we'll likely want to see the market drop down to the downside, make form a lower low and lower high. Taking out this lower low, taking out this lower low, break to the downside, form a new higher high. Sorry guys, a lower high rather. So whenever we see market, the direction of the market taking out a new lower low and form a new lower high, we're expecting a sell to a downside. Understand? So just remember this. Whenever market is in a bullish trend, you only want to be buying, and whenever market is in a bearish trend, you only want to be selling. So that's the two market trend I advise you to stay on. So and after a new lower high, there'll be a new lower low. Taking out the recent lower low, this recent lower low, yeah, and form a new lower low. So what to wait for? Just expecting for a retracement to form a new lower high, and then take an entry with your strategy from that lower high to the downside. So guys, that's basically how it is, guys. That's basically how simple it is. Just know that in a bullish trend you only want to be buying, and in a bearish trend you only want to be selling. And if you want to trade consolidative market, you only want to be buying from the support or resistance area, which many of you might not be used to though. So guys, that's it on market structure. But however, I would like to take you to the chart and explain it deeply in the chart. So guys, if I'll be explaining to it USD card. If you look at it at this daily time frame, this is USD card at a daily time frame. You notice that all these points here is, you can see this is a downtrend. This you see here is a downtrend. It's a downtrend. A downtrend. You can still call it a bearish market. This is a bearish market. This is a bearish market. And all the way to this upside, this is a bullish trend. You can also call it an uptrend. Simple as it is. Simple, guys. That's very simple. So if you're going to be taking a trade all the way to downside, you're only expecting sales. That's only what you'll be doing. And this is daily time frame. So you're only expecting sales to downside. And if market changing direction, you only want to expecting buys to the upside. So guys, I have to draw down to the lower time frame for me to explain deeply for you guys. So guys, if you look at this, you notice that the market is buying. The market is on a strong buy move, and we only want to be taking buy trend. So I will notice there was a break of structure here. Okay, broke this high here, then formed a higher high. So after market took out this higher low, higher high, I should mark it out. This is a higher high. So market took out this higher high, came and made a lower low, and then it formed a new higher high. It's a new higher high, and it retraced to make a new higher low. Understand? So you only want to be taking trades after a new higher low has been formed, and then this is a new high, and this is a new higher low. I think I should clear it out, guys. This is a new higher low. So you only want to be taking trades. Since this is a buying trend, you want to be taking trade from this zone here, from this zone, all this higher low. You want to be taking trade only from the higher low in the buy trend, because this is a bullish trend. This is a bullish trend, guys. We are clearly seeing that this market is in a bullish trend. So you only want to be taking trades from the higher lows. And if it's on a bearish trend, you only want to be taking trades from the lower highs, not from the lower lows, from the lower highs. So I think I should draw down into the 1 hour time frame and clearly explain this to you guys. So my strategy is price action. So whenever I see a new high being broken, this is a new higher high was broken. This higher high here was broken. I'm only wait for retracement to take the price to the upside. Then there's an AVG around this point. It's an AVG lying around there. Many of you don't trade with AVG, and this is support area which I mark out around there. And I've seen market consolidate at this point. But however, before this impossible move that created this new higher high, there was an impossible move around here, and I expect an AVG to lie around this area. So simple. What I wait for? Wait for a retracement to the AVG, and wait for market to tap into my support area. Simple. I wait for market to tap into my support area and take my buys for my support area, because I've confirmed this new higher low. This week here is a new higher low. This week from this point, This is a new higher low. I have confirmed a new higher low, and the market is back into my support area. Simple, back into my support area. Then I take the buys to the upside. Normally, I like to draw resistance trend line or support trend lines because I do more of price action. So guys, take my buys to the upside, and look at after this high was cleared out. After this high was cleared out. After this high was cleared out. We formed a new higher high. We formed a new higher high. Then we will chase back for a new higher low. So, and if you notice, this is support level at this point. This is support level at this point. I trade price action, so um, I mostly use support and resistance. So, and this is the higher low the market has shown us now, because the market has failed to break below this level. You see, this is support at this level, support at this level, support at this level. And if you draw way back, the market has taken resistance at level, support at this level. And I'm definitely I'm definitely going to be saying that we're expecting a new higher high to be forming soon. And simple, what I do, I use my trend line to draw the resistance trend line. Then I see it's double bottom formation. Can I trade more patterns? Then I take my buy and my stop loss below this low, and all the way to the upside. All the way to the upside. So guys, that's simply how it is on market structure. Understand? That's simply how it is on market structure, guys. Since you are buying, only wait for a new high to be broken. Wait for a new high to be broken to make a high high. Wait for a retracement and confirm a new higher low and take your buy from that point to the upside. So that's it when you're buying. If you look on the thumbnail of this video, you notice that this was the trade I marked out on that thumbnail. Understand? So the thumbnail on the thumbnail, this was the trade I marked out. The trade played out. Understand? Played out very well. So guys, that's definitely it on market structure. You should understand that risk management will be applied on your account, and you should always be trading with the trend. Don't trade against the trend. If the market is in a bullish trend, try to always expect only buys, because it will be good for you if you are trading in directional market. You will take less losses than when you're trading against the market. Because just imagine taking trades from this point, from this new higher low forming here. From this new higher high to new higher low, there's a very high probability of you taking a loss than you waiting for a new a higher low to take a buy from this point, because the market is buying, so you clearly want to buy in only from the higher lows. And if the market is selling, I think I should go back to I should draw my trades to the selling part. So guys, and if you clearly see from this point, and I told you how to drag back to make you see how trading a downtrend. You can see market forming lower low, lower highs, lower low, lower high. This is a lower high, and this a lower low. So you can see, you clearly see a lower low, a lower high, a lower low, a lower high. And if you watch, after market takes out a lower low, it forms a lower low, it forms a new lower low, then it forms a new lower high. So we only trade from the new lower high. That's what we do. We only trade from the new lower high. Many of you who trade price action trading, you see this clearly a pattern. It's a head and shoulder pattern. So wait for the neckline to be broken, and then take the trade all the way to the downside. So that's simple as it is. Make sure you're trading with a trend. Understand? Trading with trend will more likely yield you more profits than trading against the trend. So after a new lower low is formed, a new lower high is formed, and then when that new lower low is broken, we expect a new lower low, and after a new lower low, expect a new lower high. So guys, this is lower high. So we only take trades from this point, from lower highs. We only take trades from lower highs. Simple. That's what we do. We only take trades from lower highs. Since we know market is downtrend, market is from lower highs. So you only want to take trades from the lower highs, all the way down to form a new lower low. See, if you watch where I'm setting up all these sell tools, they are from the lower highs. I'm setting all these sell tools from the lower highs. So I only want to be taking trades if I know market is forming lower highs. A recent lower low has broken, lower high has formed. So I will take trades to form towards another lower low. So guys, that's basically how it is on market structure. So you can use different strategies on this. You can use definitely different strategies on this. Understand? Clearly from this point, if you're going to take a trade from this point, this year, I should explain this trade for you guys. This year is a lower low. It's a lower low, and this year this is a lower high. Market firm a lower low, a lower high. Took out this lower low, formed a lower low, and then another lower high. So you want to be only taking a trade from that lower high there. If it was very close, the market failed to break above that resistance level here. That's a resistance level. And then start to drop massively. Form the new lower high. So that's an equal high there, if I might say. That's an equal high. So and from that equal high, we're expecting a new lower low to form because the market has resisted that level, making the resistance level. So form a new lower low. So after a new lower low is formed, wait for a retracement to form a new lower high. So we only want to be taking trades from the lower highs. So listen, this lower high has been confirmed because a structure has been broken. Structure has been broken. Market has taken out this low, yeah. So I can always be expecting sales all the way from this point. Then my stop loss just where to the downside. So that's basically it on market structure, guys. So hit like and subscribe button to subscribe to support me, guys. I'll be dropping more content. Thank you, guys.